We will talk about now trading strategies and planning for right buy and sell price. So growth setup that I follow in case the current market price is greater than 20-day SMA, and 20-day SMA is greater than 50 SMA, and 50 SMA is greater than 200. So this is the most basic growth setup that I use. Very rarely, I think almost 1 out of 30 or 50 trades would be a trade wherein I'll be coming out of this particular trade setup. Okay. And this is very rarely happens if there is a really strong consolidation. So all these moving averages will be, you know, let's say these averages are like this. Okay. And they will post the certain consolidations. Those prices or the moving averages will try to overlap each other. Okay. And even the candles would also try to overlap, and the consolidation will be so much that everything will eventually start to overlap each other. Now from this point, what will happen, there would be either strong breakout in the absence of selling, or there would be a breakdown. Okay, then we can keep something as a stop loss level, or keep something as the entry level. Okay. And apart from that, if in ideal scenario, if this is going to continue, if the breakout happens, this setup will get invalidated, and obviously the stocks will not appear on your screen, and probably you should not enter in fact in these kind of stocks wherein the CMP is lower than any of these values. Okay, for short term trading is that's okay, but in case if you just notice any kind of growth or any stocks which is in its growth state, okay, that is the stage 2, you'll find this pattern will be consistently matching. Okay. Now, exception is in case you are working on a very large trade size. Okay, so maybe you can emit this one. Okay, and if you want to continuously add on to your position, so this can be your adding level. So whenever the stock is coming near to 50-day SMA, you can add at these levels, and whenever the breakout comes, you can find that the value goes about 10-day and 20-day moving average easily. So important point is buy price should be as close as possible to support levels, so that minimizes your risk. You will be as close as possible to your stop loss. Okay. So when you buy near to your support level, your loss per trade also get reduced significantly. In most cases it would be zero, in most cases it would be 1% or 2%. Your current market price should not be higher than the support level by 10%. Okay, so this is the scenario. I do not take any trade. Let's say a breakout has come, the stock has shot up from 100 rupees to 110 rupees in a trading session. So your moving average would be something like this. Okay, still below the CMP probably, and let's say it is 99 rupees. Okay, now if you see, there's almost a difference of 11% or 10% maybe from your this price to immediate support that is available as let's say 20-day SMA or 50-day SMA. So we should be avoiding taking these kind of risk. And in case you're really sure about the stock, what you can maximum do is from 110 you can just take a random stop loss of let's say 108 rupees. Okay, you are buying this stock because you think that it is going to go up. Okay, but let's say if immediately comes to 108, that means there are many sellers, buyers are losing out interest. That is the reason it is going down. And if it is reaching 110, there are higher chances that it will go down more. Okay, and we don't want to sit on this position assuming that it will find its supports near 50-day SMA. Ideally that is the level where we should be adding to the value, and that shouldn't be your stop loss. Okay, so your stop loss should be 2%, 3%, unless you're too certain about the move that it can make. Maybe you can extend it to 5 to 6% maximum. Okay, and 10% is obviously a level that we should not try to find out any logic or any reasoning to continue with the loss. We should always pre-plan buying and selling. So we're seen. So while buying, we should always check the support levels first. We should always check average prices across all time frames, moving averages as well. So that is the reason. In the case of positional traders, we start with daily. In case everything is supported by the chart that we should buy, just check again. Some resistances in the weekly and monthly charts. Reason being, moving averages on weekly and monthly chart could be different. And let's say assume you're on day you're assuming that the stock might rise up by 10%. So probably there is a weekly resistance by 10-day or 20-day moving average which will be act as a resistance. And as I said, for entry price you can use the 15-day or 5-minute charts. And while selling, we check the resistances. When the stock price is near the resistance level, we exit. In case you're certain that probably the stock price is going to up more, what you can do is you can sell in steps. Okay. Or if the stock is illiquid, you should ideally be exiting that position. Probably when the stock corrects, it can create a very volatile situation wherein it will correct by 5%, 10% in a minute or so. And it will create a clear cut doji. You might not get the chance to exit out of that position. We have seen that many of the illiquid stocks that's happening. Certain stock, I think there's a we took a trade in Suprajit. So stock, the moment we took the trade around 50-day moving average, stock shot up to I think 16 or 17% probably. And on the next day, I think, or following 2 or 3 days, it kept correcting by 5 or 6% each day. It couldn't give us a chance to exit at a proper level. Stock eventually came down in worst, in weak market conditions. And I think we have sold off I think half of the positions in a loss. So these kind of moves are usually happen in illiquid stocks. So what you should do ideally is maybe you can avoid stocks having a daily volume of less than 2 lakhs or 3 lakhs of shares. Okay. So there is no problem with blue chip stocks. They will be highly illiquid. You'll always find a good price to enter in or exit. But the problem remains with the illiquid stock, and trading with illiquid stocks requires some level of expertise. So when the stock is in its correction, okay, and when you check the stocks on smaller frames, so you'll find a right entry point. Now let us see, this is a particular chart, okay, and it is correcting. It has created a bottom. Now maybe here you may have noticed increased volume or trend reversal pattern between 2 or 3 candles, okay, and more buying was seen at these levels. Now let us say the stock has created this as a top now. Okay, so this is one high that stock has made. Then it corrects and it creates a higher low. Okay, so this was previous low, this is higher low. So when this happens, when this particular point is created, it signifies that there is a probable change in the trend. What else could happen is it goes down continuously like this and creates another lower low. Okay, but in this case it is not happening like that. It is creating this higher low. So this is a confirmation. Okay, why? Because it has created a higher low in comparison to this value. Now once it starts rising up, it crosses this value. So this line will be acting as a resistance. So what are options? What are different things this stock can do? It can either go sideways like this, or it can go down. Okay, now here what is happening, it is giving me a breakout. Okay, so this resistance stock has crossed. It has created a higher high, okay, in comparing to this point. Now we should ideally at this level be prepared for buying or add some stocks here. So let's say you want to buy 300 shares of let's say XYZ stock, and it has given you a confirmation, and you have added let's say you want to add 300 shares, so you add 100 shares here. Okay, now you know that this is my second resistance level, so you add more stocks here, let's say 100 more. Okay, why only 100? Why, and why not 200? Because we don't know whether the stock will go down from here, or it is going to continue its range, something like this. So we will add the additional 100 points on the second breakout. Okay. Now by this time, what will happen is, when you buy this particular level, so your average price becomes this. Okay. This would be your average price. Okay. Because you have bought 100 at higher level, then at lower level, you have bought 100. So your buying price will be this. Now, from here to here, your stock will be again in profit. Okay. Then once this resistance level is broken out, okay, or when you get a breakout from here, you're adding additional 100. So what will happen with that is, your stock price will be somewhere here. Now average price will be somewhere here, or maybe even at this price. Okay. But your stop loss will be still below the next resistance. Okay. And you will have lesser risk in hand. Okay. So even if you exit at this level, you will still remain in profit. Okay. But now, of course, the stock has to create this wave to create an opportunity for you to enter at this level. So currently, where there are very less and less chances to create this kind of leverage. Anyway, so once this happens, maybe you can think of adding some more over here and some more here, over here. Okay. So this also, what we discuss is the pyramiding strategy, and we are going to discuss that one more time at the end of this session. But what point I wanted to make is, we get confirmation in multiple steps. So one is the reversal from the candlestick patterns, then a relatively higher price point is met, and then it creates higher low, which is a confirmation. And once another higher high is made, that is clear sign of the trend reversal. Okay. So this is one example how we can pre-plan buying and selling. So this is UPL, and this stock came under my screener as a VCP pattern. So if you see that this price has been resisting a lot, the stock kept moving around this particular price. It created these T's over here. Okay, so if you just notice this one big T, then this series of small T's. Okay, so we expected a very strong breakout. It gave a breakout. I think exited my position somewhere here because I knew that it is going to correct. And on this particular day, this stock was under my screener. I thought I'll be adding to this position near its 50-day moving average. So if you notice that a golden cross is also going to happen over here. So on the same day, there was very strong sell that had happened. So what I had done was, I had kept a lot of orders over here. So one was price point of it's called as Sangam very popularly. The crossovers are called Sangam in Indian trading style. So this crossovers was my first buying point. Then this resistance level was my second buying point. I added to these positions on the same day, because there was so much buying at these levels. So stock corrected, and because of this heavy buying and short covering, short closed above 50-day moving average. And after that also, I think it went around 550 levels, and after that there was some negative news, and stock corrected very strongly. But this is how we can pre-plan buying and selling. So certain charts we need to always study, and maybe we can avoid these range, enter at this point, close somewhere here, just gain the 10%, and then add to the same stock at lower levels.